Okay, hi everyone. So, as I promised, this is the beginning of a series of training that we carried out. Then at the end, I will release a new strategy. So it's important we know the basics of this strategy. That's why I'm starting from here. So I started with telling us about the Forex market. So the Forex market is a foreign exchange market, which is also known as FX or Forex, and is a global marketplace for exchanging of national currencies against each other. So because of the worldwide reach of the market of trade, commerce, and finance, Forex market tends to be the largest and most liquid asset market in the world. So for you to trade for a trade to occur or for you to trade the market, you need to be able to buy or sell in the currency of your trading partner. Then the currency market is a market where money or denomination or currencies are of different countries are bought and or sold. So at a time and at each different time, you see sometimes currencies will appreciate and sometimes they will depreciate. I believe you understand what that means. So when a currency is gaining value, it's appreciating. And when it's losing value against another currency, it means it is depreciating. Then we'll talk about the market structure, and that is where we are currently. So I'll go to my whiteboard so that I will continue the explanation. So I said when a market is moving from point A, let's assume this is point A to point B, it will not just move straight from this point to that level. It won't just move from here directly to this level. So it will be moving up and it will be having some retracement. So the journey is not a smooth one. But if it is moving higher, it will move faster and longer. Then when it's retracing, it will move shorter and slower. So that is how we have retracement. And as it moves this way, when it moves up with impulse move, give a retracement, move up, retracement, move up, retrace, move up, it will be creating what we call higher highs and higher lows. So these points now, they are higher highs and higher lows. And until a market breaks a previous high, it cannot create a higher high. So we are calling this a higher high because it has broken a previous high. And we are calling this a lower high because it is a low that is higher than the previous low. That is why we call it a lower high. But all the same, they are moving in an upward direction. So this higher high was broken to create this higher high. This higher low was created because it could not get to the previous low. This higher high was broken to create this new higher high, and just like that. And if for any reason the higher lows are broken, market has changed bias or direction or trend. So when market is moving up, we buy, and when market is coming down, we sell. So that is why I mark these points. Now, on this area now, we cannot just jump in to sell here because the higher low is broken. What happened here now is called break in market structure. So when market breaks the higher low, it is called break in market structure, BMS. So the structure of the market has been broken, but we will not just take a trade on this point. We will wait for market to retrace, to still go up, and I will not be able to break above this higher high. Then we'll be certain that we can sell. So for you to sell, market will have to change direction. And how does it do that? It will break the higher low and retrace to create, now, instead of it to create a higher high, it will now create a lower high. This point now becomes a lower low. So if market decide to reverse from this point downward, then we now know that market has changed bias, and the bias now is a downtrend. So at this point, we call here break in market structure. And this point where market could not reach the previous higher high, it is called shift in market structure. That is SHS, shift in, sorry, HMS, shift in market structure. So now market has changed direction, so we'll begin to sell. And for you to know that market is going on a downtrend, the way the market will drop down will be longer and faster than when it will retrace up. So when you begin to see the move this way, you know that market is going down. It will push down with an impulse and give a consolidation or a retracement that will not move fast, and it will be shorter. So we now have, on a bearish trend, on a bullish trend, we have what we call higher highs, then and higher lows. Higher high and higher lows. Higher highs and higher low. This is also a higher high. So on this point now, we are now having a lower low, and here we are having a lower high. Lower low and lower high. Then there are some times the market will be moving in sideways or consolidation. At that point, the market will be giving us something like this. So when you begin to see market moving in this way, in these directions, like this, you know that this is consolidation. You are not expected to trade at this time, at this point. So what we'll be having here is equal highs. At the downside, we'll be having equal lows. Market will continue to create equal highs. Not always, the highs may not be equal, but this is what you'll be seeing in a consolidation move or sideways move. So this is what we refer to as the market structure. When it is going up, we say the market is in an uptrend or bullish. That is a bias. We could either call it bias, direction, or what again? Or the trend. So when it's coming down, it's bearish. So that is it. I will take us to the chart, and I told you when market breaks structure, when market breaks a higher low, it forms a lower low, and that is what we call break in market structure. And when it retraces back but could not break above the previous higher high and return back from there and change direction, this point now we call it shift in market structure. The structure has shifted from higher highs to lower highs, and market has broken a higher low here to form a lower low, break a market structure and shift the market structure. So I will take us to the chart so that we can see it the way it is on the chart. Let me share my screen on the chart. Okay, this is what I just explained. So this is a bull trend, a bullish trend, and this is a bearish trend. This is a range or a sideway or consolidation. When market goes up, this is downtrend. This is the move. Market creates a lower high. This was a higher high. Market created a lower high here, a lower low, and lower high, lower low, and broke above this lower high that we have. So now this will now be referred to a higher high because market has broken this structure, higher high. And what happened here? This is now a shift in market structure from here to here, shift in market structure. What I explained there, it was just for a down trend, but this is for a bullish trend. So market failed to create a lower high here and broke above the previous lower high. So now this will now become a higher high. And we'll also wait for price to retrace down and find out if it will not go below this. If it doesn't go below this one, this will now become a higher low. Then the next thing that will be formed will be a higher high. So let's go to the chart. So this is Euro USD M15 time frame. So as you can see here, from this point to this point, market was bullish. And if you can see, market were creating higher highs. So let me just mark it out. At this point here, market created a higher high and dropped down to create a higher low. From here, market created another higher high and dropped down to create a higher low. Now, before this high was created, you can see that market broke above the previous high. So this high must be broken for you to say market has created a higher high. And this low must not be broken for you to say market has created a lower low. And look at what happened here. After here, this high was broken. And market created a lower high, a higher high here. After this higher high, what happened? Market came down and broke below this higher low. What do we call this? This is break in market structure. But as I said, you are not going to sell until you see price retreat back up without breaking this higher high and continues down. But what do you see here? Market broke above this high. So what happened? The trend continues. Some people, as soon as market broke below this higher low, they will think this one, the market maker will use it to deceive you that they want to go down. And some people will just take a trade here for a sell. And as soon as they take the trade, market will just start pushing up. So what happened? This higher high was broken to create a new higher high. So created a higher high here. And what happened? Market dropped back down to create another higher low. As you can see, this low did not get to this point. But the next thing that happened was this high was broken. High was broken. And we got to our destination. Market created a higher high here. So that is how the market works. So if you are buying, after market creates a higher high here, breaking this structure, market structure was broken here. This was whenever this market was coming down, this was a lower high, and this was a lower low, and market created a lower low. Market pushed up to break this lower high to form a higher high. That is break in market structure. Then we wait for market to reverse back, but could not take out this low, but went up to break this. This is when you are certain that direction of the market has changed. So what do? You wait for price to maybe retrace to a particular point. There is a point this market will retrace to either here or here. You will learn it later in the next training. The next training I will see at the end, I think the second to the last or third to the last, we'll know where market should retrace back to before we take entries. So market will retrace. As soon as market retrace a bit, you can take the entry and target the previous high that you have here for your take profit. That is how the market moves. You can see uptrend, higher high, higher low, 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 higher high. And what we have here is now a lower low, break in market structure. So price could not go back to break this high. At this point, you think market has changed direction, even coming down to break this level. And they decided to go back up again before dropping down. So these are some of the basic things you need to know before we jump into the strategy. Now, here we had a higher high here, and market created a higher low because it didn't get to this low to break it. At that point, instead of market to create a higher high, it created a lower high. And that was how market was moving on this Asia session. So in between these 2 points, in between this swing high and swing low, or swing low and swing high, market was raging until the structure was broken here. Then what we now have here is a lower low. What we now have here is a lower low. Then market created a lower high. From there created a lower low, a lower high, a lower low, a lower high, a lower low, a lower high, and just like that. So this will now become a downtrend. So at each time when market breaks a lower low and retrace, we take an entry for itself. So that is the structure of the market. So this is the range, or a sideways move. Now look at this point, Euro USD on Friday. This is a sign of consolidation or a sideways move. Look at it. Market was just hovering around this level. It neither moved up or down. So at this point, you avoid trading. Avoid trading at this point. Even here, look at this point. This drop down, swing low, swing high, swing low, swing high. You avoid trading. So we'll end the training here. Tomorrow we'll continue with candlestick pattern. That is another interesting aspect of this strategy. Please take note of everything I'm teaching you right here now, because you are going to apply them in this strategy. So I'm not going to bulk us. I'm not going to really load us with too much. I want us to take it slowly. If each day we take a 20, each day we take a 20 for the 7 days. At the end, at the 7th day, I will bring out the strategy. If I teach you the strategy now, it may be strange and you may have a lot of difficulties with it without knowing all this explanation first. So that is why I'm taking it one after the other. Tomorrow we'll look at bullish candlestick pattern. All of them will be applied in the strategy. Then the following day, we'll talk about bearish candlestick patterns. Then we'll look at the next day, we'll look at support and resistance, supply and demand, and some concepts that will be applying to the strategy before we'll release the strategy proper and test it. Then we'll begin to trade it. So thanks for watching. If you have any question, you can ask. So please do well to, I'll be posting the link of this video on the Telegram group. Do well to watch it. When you watch it on the YouTube channel, please try and subscribe, comment and like, share the video as well, and invite other persons who are willing to learn to join. You are going to be profitable from this strategy. Thanks for watching.